This is Nightly Business Report with Tyler Matheson and Susie Garrett.
Priced for perfection, the Dow and the S&P are at record levels again. The good news seems to be baked into the market, but is that necessarily a good thing?
Border threat. This refinery may be the biggest hurdle to keeping Iraq unified. Why and what it might mean for oil as well.
And the eternal portfolio. Our market monitor tonight has a list of stocks he says you need to own forever. All that and more tonight on Nightly Business Report for this Friday, June the 20th. Good evening, everybody. I'm Bill Griffith, in again tonight for Tyler Matheson.
And I'm Susie Garrett. Good evening from me as well. Two new records on Wall Street today as investors still feel good about the Federal Reserve's policy on low interest rates. What about unrest in Iraq? Investors seem to be shrugging that off for now. As a result, both the Dow and the S&P settled at new records, while the Nasdaq closed at a 14-year high. Here are the numbers. The Dow added 25 points and is closing in on the psychologically important 17,000 level. The Nasdaq was up nearly 9, while the S&P scratched out a 3-point gain. For the week, all three indexes rose at least 1%. The S&P was the leader, up 1.4%. And with summer about to begin, Morgan Brennan tells us some stocks sizzle more than others when the weather heats up.
Sell in May and go away. It's a Wall Street mantra meant to avoid seasonal declines in equities. But there's a number of stocks that actually do better in the summer, posting on average double-digit gains from Memorial Day to Labor Day, and that have been doing so for the past 5 years. Take Apple. The tech giant has traded higher each of the last 5 summers, garnering a 15% return. Investors tend to pile into the stock ahead of September, when Apple typically makes product announcements.
This is likely to be a summer that will be an Apple kind of a summer, in that they've got a new cell phone coming out that's going to have the new iPhone's going to have a larger screen, particularly for baby boomers and for people who like an easier read on their smartphones.
Since summer is peak vacation season, travel and leisure companies also perform well. Online travel sites like Priceline and Expedia have typically pulled in 26% and 14% returns, respectively. Also, gaming stocks like Wynn, and some experts even like amusement parks.
Leisure stocks, in particular, we would think of Six Flags, an affordable luxury for families who are homebound this summer.
Hot weather makes consumers thirsty. That bodes well for beverage companies like wine and beer maker Constellation Brands. That's accounted for a heady 20% return. And Keurig Green Mountain, best known for its K-Cup coffee pods, has averaged 17% during the summertime. But pay close attention to energy companies, especially now that Iraq has sent oil prices higher.
You tend to have the driving season, so demand for gasoline goes up, and energy stocks also tend to rise. So if you're looking for a seasonal bias trend, it's definitely energy.
But energy companies can be volatile, closely tied to crude oil and other commodity prices. It's also important to always look at a company's fundamentals, despite historic patterns or the season. And some experts have predicted a stock pullback, something to keep in mind even as indexes continue to hit record highs. For Nightly Business Report, I'm Morgan Brennan.
Well, Mike Holland believes that stocks are in a bull market. He doesn't see a correction anytime soon. He's chairman of his own money management firm, Mike Holland and Company. Michael, Janet Yellen this week took a rather unusual step as Fed chair by publicly stating that she didn't think that stocks were overvalued. She thinks they're appropriately valued for the economy right now. I take it you agree.
I do, Bill. You know, we've been in a bull market since the bottom 5 years ago. The Federal Reserve said they wanted to lift stocks and bond prices. They've done it. She said it again this week that this is a main portion of why I remain unconvinced that we're due for a bear market in the near future. She has said this week, along with the rest of the Fed, that they're going to continue to support this market. I don't need to know a whole lot more than that. There are actually 2 other factors among the 3 factors that caused me to be this way. The second one is the negative psychology that began long before 5 years ago at the market bottom. People still don't like stocks overall. There are some sentiment surveys that are getting a little toppy right now, but overall people still are very skeptical and cynical about stocks. And then the last thing itself is the Fed. If the Fed stays where it is and we continue to have the valuations where they are, as Janet Yellen said, valuation plus the Fed plus negative psychology equals a market that isn't likely to be in the bear phase in the near future.
But Mike, you saw this week the one concern that was in a lot of the conversations about the outlook for the markets was inflation and Fed policy on that issue. You know, how can we be sure that inflation is not going to be getting out of control? Where do you stand on that?
So it's exactly the right question, because people I respect, and there's some who've been more right than others over the years, are saying that they think that if we do get a significant correction in this bull market in the near future, it will be an inflation scare. We get the PCE number next week, which is what the Fed looks at. If that's higher than people suspect, they will immediately say, oh, the Fed is going to have to change its policy and tighten sooner, therefore we should sell stocks. So sometimes it gets pretty simple. This has been the easiest bull market of my long career, and I don't think the inflation bogey is going to come out and actually do some damage in the near future because of the things that Janet Yellen said this week about why inflation is not her worry.
For the most part, it's the defensive stocks, as they're known, that have been leading this rally lately. You know, those stocks that don't expect much growth in the economy, those stocks that pay a pretty good dividend. You know, those stocks that people go to for slow but steady growth. Is that where you are right now, or are you expecting stronger growth here?
I don't expect stronger growth for all the reasons you report every day, Bill, but I think that that way you describe what's recently done well is kind of a description of the overall economy, not only in the U.S., but globally. It's slow, grudging growth. It's not really a Goldilocks economy by any stretch, but it's continuing. We're going to get 9% earnings growth this year, maybe 10% in the U.S. It's not enough to make people pop champagne corks, but it's enough to keep stocks undervalued at 15 times next year's earnings.
I just want to squeeze in one last question, and we have half a minute for it. It's important. Iraq. I mean, at what point does this violence in Iraq or any other developments there become a problem for U.S. markets?
What used to be referred to, Susie, as the exogenous factor. Absolutely. If we get this thing spiral out of control, which is entirely possible, and it's one reason I always have cash, because maybe it'll happen. If it does happen, I'll have some cash. But that takes us oil to 150, 200, 250 when craziness happens. Yes, all bets are off. And so for the people who actually have stayed in this bull market for the last 5 years, you probably should have some cash in case something like that happens.
Okay.
Yeah. Michael, always good to see you. Thank you.
Thank you, Bill. Thanks, Susie.
Mike Holland and Company.
Well, as Mike just said, the situation in Iraq could be an issue for the U.S. markets. Iraqi forces gathered north of Baghdad today, preparing for a pushback to cut off Sunni rebels from reaching the capital. As a result, oil prices were relatively stable. Brent crude fell a fraction, but the U.S. benchmark West Texas crude was up about 0.75%, topping $107, the highest level since September. Michelle Caruso-Cabrera is in Iraq and has more on what could impact the oil market.
Islamic jihadists may not be the biggest threat to the unity of Iraq. Believe it or not, it may be this, an oil refinery. This is not the Beiji refinery in the news for the last 3 days because it's under assault from the rebels. No, this facility is 3 hours away in the Iraqi region of Kurdistan. This is Kurdistan's largest refinery. It processes 90 to 100,000 barrels of crude oil a day into kerosene for cooking, gasoline, diesel, and also fuel for the power grid. The refinery is emblematic of Kurdistan's push to create its own oil industry and stands in sharp defiance of the Iraqi central government.
This is our crude oil, and we should get benefit to our Kurdish people.
Kurdistan is a semi-autonomous region of Iraq, and the Kurdish people have long dreamed of having their own independent country. They think they should be able to drill for the billions of barrels of oil in the ground beneath them. Their plan is to pump 1 million barrels per day by next year, with the help of companies such as ExxonMobil, Chevron, and Gazprom, which have exploration contracts. But Baghdad says all these moves are unconstitutional. Kurdistan's Minister of Foreign Affairs thinks otherwise.
Kurdistan region laws have supremacy. So therefore, we are the legitimate authority in this region. Whatever we do here is legal and constitutional.
Kurdistan doesn't have just wells and refineries. They've gone as far as building a whole new pipeline buried underground here because the Iraqi government won't let them use the one right across the border. It connects to a port in Turkey. When Kurdistan loaded up its first ever tanker with 1 million barrels of crude, it was front page news here. The headline reads, "Now Kurdistan will have its own economy." Kurdistan struggled to sell the oil because Baghdad threatened to sue anyone who bought it. In fact, at one point, there were 3 tankers of Kurdish oil floating out in the ocean, 1 million barrels of oil on each. That is, until today. Reuters reports they were finally able to unload 1 tanker in Israel. Minister Mustafa says it won't be long for the other 2 because the world needs more oil.
It will be sold, and there is no legal dispute. We are determined to go down that road, and that would be a new age in the history of the Kurdish people.
Substantial oil revenues, say experts, will be a key step to Kurdistan independence. But already, the region's newspapers are redrawing the map of Iraq, where Kurdistan stands alone. For Nightly Business Report, Michelle Caruso Cabrera, Northern Iraq.
Back here, Starbucks is raising prices on some of its drinks by up to 20 cents. That starts next week. Company says the increase in its stores will hike the average customer tab less than 1%, but you can also expect to pay about $1 more for the packaged coffee Starbucks sells in supermarkets.
That price hike is in response to a spike in coffee costs this year. Even though those prices have come down a little this week, coffee futures are still one of the year's top commodity gainers. Jane Wells has more.
Coffee prices have been brewing up this year, and people have noticed.
I was doing 5 times a week, but cut it down to 3.
Why is that?
It just saves money.
But they've come off a caffeine high. Turns out a drought in Brazil maybe wasn't so bad. Brazil is the largest producer of the popular Arabica beans, and fears of a reduced crop sent coffee futures up over 50%. They've now fallen by more than half. The CEO of Dunkin' Brands said earlier this week that people overreacted to Brazil. Quote, it wasn't as bad as everyone expected. Today, however, coffee futures went back up because now they're actually harvesting in Brazil. It's time for the truth.
There was some rain that developed late in our spring, their fall, and we thought that that may have helped the crop and some of the dryness, but it turns out that rain was too little too late.
Higher prices are starting to trickle down to the consumer. Even though Starbucks locked in prices for much of its coffee when they were lower, it is planning to raise prices for customer next week for the first time in a year. On some beverages, it'll range from 5 to 20 cents. And packaged coffee it sells in grocery stores could be 8% more expensive.
Coffee prices changing isn't really affecting my consumption.
Is it enough to make people think twice?
Just need it. Gets me going every day.
What is the alternative?
For some, at the moment, apparently nothing. For Nightly Business Report, Jane Wells, Los Angeles.
By the way, on Monday, we told you about Starbucks reimbursing college tuition for some of its workers. Well, after facing questions about its program from education experts, the company is now clarifying its statement on that. And while we knew that juniors and seniors would be the ones receiving full reimbursement, with underclassmen getting partial aid, it now turns out that the real cost of this is being borne by Arizona State University, which is discounting its tuition in the form of scholarships, with federal aid expected to cover much of the rest in many cases. Starbucks will reimburse for out-of-pocket expenses for upperclassmen once students earn 21 college credits.
Coming up on the program, this week's Market Monitor has a group of stocks he thinks you should consider. He says they're undervalued, unloved, but they're good buys now.
Shares of Oracle were hit today following the company's earnings and revenue miss that we told you about last night. At the close today, shares were down about 4% to $40.82. Some of the problem has been attributed to the company moving into cloud computing. Josh Lipton has more now on Oracle's cloudy transition.
All the different pieces built on top of modern technology.
Oracle has been talking about migrating to the cloud for a few years, but now the software giant has hit a patch of turbulence. The company reported earnings and revenue that missed expectations, and a closely watched metric, revenue on new software licenses, also disappointed analysts. Despite today's fall in the stock, Oracle shares are still up about 20% over the past 12 months. companies around the world use Oracle's software to help manage their businesses. CEO Larry Ellison is pushing a rapid migration to the cloud, or web-based software sold as subscriptions rather than licenses. Oracle says it has now become the second largest software-as-a-service company in the world. But some financial analysts who cover Oracle say its latest results were disappointing and prove that the company still faces real challenges ahead in its transition to the cloud.
No different than Spain being eliminated from the World Cup after a week. That's where I'd put Oracle's results. Investors were expecting a beat. They got a miss. I'd call it a shocker, and really it took a step back in terms of credibility in the Oracle story.
And we worked again and reworked.
While Oracle boasts the growth of the company's cloud services, its cloud-based products still constitute less than 5% of the company's overall revenue. Analysts expect Oracle will keep boosting its cloud services both internally and also through acquisitions. Oracle bought a company called LiveLook on Friday, and there are reports it may make an acquisition of Microsystems for at least $5 billion. Oracle's latest results are bound to cause investor angst. Analysts say while Oracle can't turn away from the cloud, it does need to pick up the pace of change. Josh Lipton, Nightly Business Report, Silicon Valley.
Sales at Darden's Olive Garden and Red Lobster chains continue to slide, dragging down its earnings, and that's where we begin tonight's market focus. Darden said profits fell 35%, blaming it on higher costs and expenses. The quarterly numbers included Red Lobster's results. That chain is planning to spin off soon. Darden also issued guidance that missed estimates. The stock tumbled about 4% to $47.58. By contrast, CarMax reported strong earnings today, and its shares zoomed higher. The used car chain posted a 16% gain in profits thanks to higher consumer traffic and pricing. Income in the company's financing unit also rose, and so did the number of cars sold. Shares surged 16.5% to $52.75. Well, third time is not the charm for AbbVie. Its $46 billion takeover offer for Ireland-based Shire, this is its third attempt, was turned down. Shire said the offer undervalued the company and its growth prospects. The drug maker also said the proposal would deny its shareholders the full benefits of its strategy. Shares of Shire popped more than 16% to $222 and change. AbbVie fell 1.5% to $53.30. And Kite Pharma soared in its market debut on the NASDAQ today. The biotech company, which is studying a potential immunotherapy cancer solution, offered up 7.5 million shares. They were priced at $17 apiece. Look at where they ended today. Investors snatched them up, sending the stock up more than 70% to $29.
Yes, Kite flying high. There, I said it. Shares of Molson Coors hit a record high after Morgan Stanley upgraded that stock. The firm raised its price target by about $20 to $79 a share and changed the beer maker's rating to equal weight from underweight. The analyst cited valuation and improving fundamentals. That stock closed at $74.86. That's an increase of more than 2%. And it was an historic day for Radio Shack, but not in a good way. That stock traded below $1 a share for the first time ever, as investors continue to worry about the electronic retailer's struggles. The New York Stock Exchange can now delist any stock if it closes below $1 for 30 consecutive trading days. So we're watching that one. Shares were at 92 cents, down more than 10.5% on Radio Shack. And it looks like General Electric is the winner in the battle for French conglomerate Alstom. The French government is now backing GE's bid. It also said it's going to buy a 20% stake in Alstom. Siemens and Mitsubishi Heavy Industries upped their bid in an effort to win that company, but to no avail. By the way, Alstom still has to approve GE's bid itself. Shares of GE rose a fraction today to $26.97. And Owens Corning saw its shares fall after the company lowered its outlook for the year. It blamed the disappointing guidance on continued weakness in its roofing business. That stock dropped by 6%, $38.81.
Our Market Monitor guest tonight is confident that the stock market still has more room to run, and he favors value stocks over growth stocks. He's Mark Tepper, president of Strategic Wealth Partners. Welcome, Mark, to Nightly Business Report. Let me begin by talking to you about your strategy here. Why value, and how hard is it to find value stocks?
Why value? So, typically when an economy is pretty weak and just emerging from a recession, investors they prefer growth stocks over value stocks due to the fact that they're not getting much growth out of the economy. However, we're currently in a place right now where the economy is strengthening. And when the economy actually begins to strengthen, value stocks consistently outperform growth stocks. So, there's a lot of critics out there that'll say that there's no value left right now. We're looking at a forward multiple on the S&P 500 of 15.7, which is pretty much in line with historical averages. And there's a lot of people that say, well, it can't go any higher, or if it does, it's overvalued.
Right.
Look, these times are different. We're looking at a very low interest rate environment. Capital is going to chase yield, and you see a lot of money moving up the risk ladder. So, we're confident that the multiples could expand up to about 17 or so before we would actually pull back our overweight rating on stocks to equal weight.
You say the two most undervalued and unloved sectors right now are energy and financials. I mean, with the price of oil going higher, I can imagine that might change. But be that as it may, you still like a company like Chevron, right?
We do, yeah. I mean, when you look at the energy sector, it makes up 13% of the market's earnings, but only represents 10% of the market's cap weighting. So there's a ton of long-term potential for the energy sector to recapture some share of GDP. When you look at Chevron, it's a great dividend play. A lot of our clients have transitioned into either selling their businesses or they're retiring. It's a great dividend play. It's got a good valuation. And the one thing about Chevron over the course of the last few years is it's been unloved due to the fact that it's been investing a lot in the form of capital expenditures. Management recently came out and said 2013 was a peak spending year, and that spending should flatten out through 2016. So it looks pretty promising for Chevron.
All right, tell us about ConocoPhillips trading now around $85. You have a target of 100 on this stock. Why do you like it?
Yeah, again, another good energy play, good dividend, good valuation. The one thing that really stands out about ConocoPhillips is the fact that it's got some diversification. So it's not just oil. It had this massive acquisition years ago where it did everything it could to get into the natural gas space. So it gives us an energy component in our portfolios without being strictly dependent upon oil.
Among the financials, you like Wells Fargo. Of course, they're the largest mortgage lender in the land. Is that a bet on the housing market?
No, not at all. I mean, that is one of our concerns is the high exposure that Wells Fargo does have to the mortgage industry. We want to be in financials. Again, we think financials, just like energy, have the potential to capture some additional share of GDP. But Wells Fargo, even in the middle of all of the issues with the mortgage market, it's done a very good job of beefing up both its consumer loans and also its commercial loans. And we feel that those are going to be a really important part of banking business over the course of the next several years as businesses begin to really undergo some more capital spending to replace some aging capital stock that they haven't invested in over the course of the past decade.
All right, lots of good information. Any disclosures to tell us about, Mark?
Yes, we as a firm own all three companies in our client portfolios.
Okay, terrific. Thank you so much for coming on the program. Mark Tepper from Strategic Wealth Partners.
And coming up, how investors and startups are taking advantage of the hottest sector in the housing market. Coming up.
Some positive news on the jobs front to tell you about. The Labor Department said 36 states saw employment growth last month. 14 states showed losses. North Dakota still continues to have the lowest rate of unemployment at 2.6%, followed by Vermont and Utah. Rhode Island, by contrast, has the highest at 8.2%. Nevada is second highest, followed by Kentucky.
And to another leg of the economy, namely housing. Last year, investors soured on the apartment sector, claiming that surging home sales would pull down both rents and occupancy. They also feared that too much supply coming online, but a stall in sales this year has them now changing their tune to some degree. Our real estate reporter Diana Olick has more on housing.
Look up into any apartment above you and odds are it is filled. National apartment occupancy hit 95% in May, the highest level in at least 6 years, according to Axiometrics, a data provider. This as thousands of new units are coming online.
We're expecting, even though that there's a lot of new supply that's come online already, it's absorbed very well.
It has investors who soured on apartment REITs last year when home sales were surging, rushing headlong into the trade. The S&P index of residential REITs is now up nearly 14% from a year ago and up nearly 20% just year to date. Top performers, Preferred Apartment Communities, Essex, and Avalon Bay. Weak home sales this year amid still rising home prices are behind all that.
I'm a new young professional and I can't afford to buy, so even though it probably adds up to almost the same.
I really don't have the money to put down a down payment and get a good mortgage rate, so it's cheaper to rent.
About 180,000 new apartment units have become available throughout the U.S. in the past 12 months, according to Axiometrics. Thousands more are on the way as apartment construction has surged in the past 2 years. Still, rent growth in May was the strongest in 16 months at 3.5%. No surprise, the surge in demand is fueling new startups designed to make the rental experience smoother. Sites and apps like RadPad, Lovely, HotPads put listings in your hand and let you pay your rent and get stuff fixed while you're at it. A new one that offers reviews from current renters called Swapped launches later this month. And it's not just these new buildings that are getting all the love. Apartment occupancy is rising nationwide because as rents go up, more people are moving to so-called Class B apartments. These may not be in the top locations, but they certainly do come in at a lower rent. For Nightly Business Report, I'm Diana Olick in Washington.
By the way, to read more about the surge in apartment occupancy, head to our website, nbr.com.
And that's Nightly Business Report for tonight. Have a great weekend, everyone. I'm Susie Garrow.
I'm Bill Griffith. We will see you again on Monday.
I'm Susie Garrett with the Nightly Business Report News Brief. Investors continued their optimism over the Federal Reserve's current policy on low interest rates, sending both the Dow and the S&P to new records, while the Nasdaq closed at a 14-year high. At the close today, the Dow added 25 points and now has its sights set on 17,000. The Nasdaq rose 9 and the S&P 500 scratched out a 3-point gain. A new report from the Labor Department showed 36 states saw employment growth last month. North Dakota continues to be the state with the lowest unemployment rate, 2.6%. Rhode Island has the highest rate at just above 8%. And Starbucks says it's raising prices on some of its drinks up to 20 cents starting next week because of soaring coffee costs. Be sure to tune into Nightly Business Report right here on your public television station.